Hey everyone! If you've ever felt like investing is this giant, complicated puzzle, you're not alone. The truth is, it's often made out to be far more complex than it actually is. Forget the frantic trading, the constant market timing, and the endless stress of trying to predict what stocks will do next. That path, my friends, usually leads to one thing: poor results. As the legendary Charlie Munger so wisely put it, the big money in investing is not in the buying and selling, but in the waiting. And that, my friends, is the core principle behind today's video. We're diving into 5 incredible dividend stocks that you can genuinely feel good about holding for the long haul, the kind of companies you can buy and practically forget about, knowing they're working hard for your financial future. These aren't just good companies. They've also got a fantastic track record of outperforming the market. A very sweet cherry on top. Now here's the crucial mindset we need to adopt as we go through these companies. We're investing today for 10, 20, even 30 years down the road. The ultimate goal here? To someday live off the consistent dividend income these businesses provide. We're talking about mature, stable businesses with incredible staying power, poised to keep growing and paying you year after year. These are the kinds of companies that are resilient to drastic change and disruption, making them perfect long-term anchors for your portfolio. Alright, let's kick things off with our first rock-solid performer, Republic Services, ticker RSG. Republic Services isn't flashy, but that's precisely its superpower. They're one of the largest waste management companies in the country, collecting, recycling, and disposing of trash with tremendous scale. We're talking 13 million customers across the country, and yes, I've seen of them in action in Las Vegas, and I can attest the service is top-notch. Think about it. Trash is a constant. People and businesses generate garbage every single day. And no matter what the economy is doing, no matter what's happening in the world, our garbage still needs to be collected. It's an absolutely essential service that never stops being necessary. This predictable demand has allowed Republic to build an incredibly stable business. Here's what I love. A staggering 80% of their revenue is subscription-based, giving them this amazing annuity-like profile. And you can see that consistency reflected in their financials. Steady growth in sales, earnings, and free cash flow. And that, of course, trickles down to the dividend. Republic has actually grown its dividend for over 20 years, putting them on the cusp of dividend aristocrat status. But it's not just about the dividend. Republic has been an absolute market beater for shareholders. Over the last year, RSG is up about 36% compared to the S&P's 10.6% substantial outperformance. Zoom out to 5 years, and the spread widens even further. Republic has returned nearly 250% versus the S&P's 112%. It's more than doubled the market. And over the last decade, Republic has nearly tripled the S&P 500's returns. Incredible. While waste management might not be the most exciting industry, it's definitely one of the most reliable. Republic Services is a leader in this space, and it's absolutely on my watch list. Next up, a company many of you are likely familiar with, Agree Realty, ticker ADC. This is one of the more popular real estate investment trusts, or REITs. Agree owns and leases out retail properties across the US, but not just any retail. They focus almost entirely on essential recession-resistant businesses. Think grocery stores, pharmacies, home improvement chains, dollar stores, the places people still go to, even when times are tough. What truly makes Agree stand out is the quality of their portfolio. Around 70% of their tenants are investment-grade rated, meaning they're financially strong and less likely to default. Plus, 100% of their leases are triple net. This is huge. It means the tenant, not Agree, is responsible for property taxes, insurance, and maintenance. Fewer headaches, more predictable income. On the dividend side, Agree pays a monthly dividend starting around 4%, which is fantastic. And that dividend has grown by about 6% on average every year for the past decade. That's a Goldilocks combination. A higher starting yield with solid mid to high single-digit growth. This makes Agree double trouble in the best possible way for dividend investors. Looking at their returns, Agree has absolutely crushed the S&P over the last year, up about 36% including dividends compared to the S&P's 10.6%. Over 5 years, the S&P pulls ahead slightly, but zoom out to the last decade, and ADC takes the lead again, up about 276% compared to the S&P's 217%. Overall, strong outperformance over the longest period. Stock number 3 needs no introduction, Visa, ticker V. I'd be shocked if you haven't heard of Visa. But surprisingly, despite its global recognition, many don't actually know what this business does. In a nutshell, Visa operates as a global payments network. When you buy something, Visa essentially acts as a toll booth, checking with your bank, confirming funds, and then facilitating the transfer of money from your bank to the business's bank, all while collecting a small fee. I absolutely love this company. To me, it's the gold standard of stocks. I genuinely can't think of a company with more perfect financials than Visa. Everything is straight up and to the right, growing aggressively at double-digit percentages. Their debt profile is also incredibly solid, with net debt to free cash flow around 0.5, meaning they generate twice as much free cash flow as they have net debt. Now on the dividend side, I'll be honest, the starting yield is undeniably low, less than 1%. If you're close to retirement and seeking immediate income, this might not be your first choice. But if you have a long-time horizon and can let the magic of dividend growth and compounding do its thing, then Visa is absolutely worth considering. Their dividend growth rate is an incredible 15% on average over the last 5 years. That more than makes up for the lower starting yield. I love this company so much, it's actually my single largest individual stock position, making up about 9% of my total portfolio, and I've only held it for a little over a year. In that time, Visa has delivered market-beating performance. Over the last year, it's up about 28% compared to the SP's 10.6%. Over 5 years, Visa has slightly underperformed the S&P, but zoom out to the last decade and Visa takes the cake, seeing almost exactly twice the returns of the S&P 500. You can't talk about resilient and predictable businesses without mentioning Rollins, ticker ROL. Many of you know I've been dying to own this company for ages. Rollins is one of the world's largest pest control companies. It's a bit under the radar, but I see it as a true hidden gem. Much like Republic Services, the need for pest control is constant. Bugs and critters don't care about the economy, they don't take a break. It's incredibly difficult to permanently get rid of pests, which is fantastic for Rollins because it creates reliable, recurring demand for their services. Over 75% of their revenue is recurring, making them incredibly resilient to economic downturns. During the Great Financial Crisis, they still managed to grow revenue by mid-single digits. And during the pandemic, a whopping 12% revenue growth. That's just incredible consistency. Their fundamentals are a work of art, reminding me a lot of Visa's financials. Steady, predictable growth, and a truly well-run business. The dividend yield won't blow you away, sitting just over 1%, but what more than makes up for that is their dividend growth rate, coming in at over 17%. All in all, I'm a huge fan of this company. My only problem? It never seems to go down in price. This thing just keeps climbing. Over the last year, Rollins has basically doubled the SP's returns, with a gain of about 21.7%. Over 5 years, it's just barely edged out the S&P, but then, over the last decade, Rollins has more than doubled the S&P 500's returns, up almost 500%, including dividends compared to the SP's 217%. Absolutely phenomenal. And now, for our fifth and final stock, one that's very near and dear to my heart. Vici Properties, ticker VICI. Many of you already know Vici, as it's another popular REIT, but for those new to it, Vici is one of the world's largest experiential real estate investment trusts. They own a portfolio of iconic properties in top gaming, hospitality, and entertainment destinations, most notably, Las Vegas. Their portfolio here is like the greatest hits of the Las Vegas Strip. Caesars Palace, the Venetian, MGM Grand, Mandalay Bay, and so many more. You might not initially think of the casino business as recession-resistant, but Vici has proven time and again how durable and dependable they are. Their average lease term is an extremely long 40 years, and 100% of these are triple net, just like Agree Realty. This is a landlord's dream setup. And here's the kicker. During the pandemic, when the world basically shut down, Vici still collected 100% of rent from their tenants and maintained a 100% occupancy rate. That's a perfect score, nearly unheard of in the REIT space, and it speaks volumes about the strength of their contracts and the quality of their tenants. Now let's talk dividend stats. These are, in my opinion, the best-looking figures we've seen all day. You can lock in a yield greater than 5% with Vici, combined with a near 8% average dividend growth rate. This combination makes Vici double trouble in the dividend department. Over the last year, Vici definitely has an advantage over the S&P, with a 16% gain. Over the 5-year period, they are truly crushing the S&P, with a gain of 157.5% compared to the SP's 112%. That's a 45% outperformance. And going all the way back to Vici's first day on the stock market in February 2018, they've slightly outperformed the S&P, proving their consistent strength. So there you have it. 5 incredible dividend stocks that I believe are perfect for buying and holding on to forever. They represent stable, predictable businesses with a history of rewarding shareholders and outperforming the market. Now, if you're looking for more investing wisdom, I've got another video right over here that's equally important. I'm telling you about 3 more stocks that are the exact opposite of what we discussed today. Many investors fall for them, but truth be told, they're terrible investments you should avoid at all costs. So click right over here to learn about those.